This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. But just before I start today's video, I just want to start by wishing you all a happy new year. Of course, I haven't been posting videos for the past 2 weeks as it was a holiday season. So I hope all of my viewers here on YouTube had a fantastic Christmas. For those who celebrate it, and of course a very happy new year for 2023. Now, before I start today's video as well, I have some news, an update on my business. Unfortunately, I will not be posting any more messages in my free analysis group that I used to advertise on my YouTube channel. Going forward, you will have to pay for my research, my daily research and my signals, and you can do that by visiting dailymarketmovements.com. The website link is in the description of today's video. And once you arrive on this website, you can simply click on subscribe and you will be presented with two subscription options, a monthly one for $39 or a yearly one for $399, which works out a lot cheaper at a monthly rate. So let's get underway with my very first video of 2023. So here we have the S&P 500. Currently trading at 3,873, and unfortunately, many boards were anticipating for that Santa Claus rally as we go into year end, and it didn't really occur. We are trading up today, up around 0.76%, and this is very expected. Typically what tends to happen is on the final trading session of the year, a lot of managed money firms, they will close out positions to see out the year so that they can then go and present their portfolios or get rid of their losing stocks, for example, and then on the first trading session of the year they'll then reopen those trades. So that's typically what you're going to see today. You're going to see any negativity that occurred during the last trading session of 2022 unwind itself, and you do typically see a jump on the first trading session of the year. So we're up a little bit at this moment in time, but that doesn't really mean anything because come tomorrow we could just see some more selling pressure. And I must be honest with you guys, I do anticipate us to go lower here for the S&P 500. I'm very impressed how high we've actually managed to stay here. Like if we go over to the Nasdaq 100, for example, the Nasdaq went and retested the yearly lows. So the S&P 500 has managed to stay up quite well compared to other indices, but I do expect us to see some more selling pressure as we go further into Q1 2023. And the reason for this is earnings. Of course, we're about to enter into earnings season, starting 2023 off with a bang. And as we start to see some soft guidance going forward from many of these big tech companies, that's what I really believe will start to hurt the S&P 500. A good example of this is Apple, right? We've seen Apple sell off significantly in the past couple of weeks, and I feel like that could potentially continue as we go into the middle of 2023. But the good news is that I am hopeful. I feel like it might take us 3 to 6 months for us to get through this rough patch. But from the mid year point all the way through until year end, that's when I do expect a trend in the markets to change significantly. So I feel like it's going to be more of a story for the back end of 2023. The first half is going to be extremely difficult to navigate as we do, potentially go into earnings season where we could see companies coming out with a lot softer guidance, and that's what's going to be really difficult, is to try and calculate what is going to happen within the next 3 to 6 months. But the S&P 500 rallying at this moment in time, I see any rally as a selling opportunity. I still believe that we go and retest those yearly lows last year, which was pretty much down at around 3,600. So I'm a seller here, no interest in buying this market.